Hey, you look stressed out. What's going on?
Yeah, I've been thinking a lot about money lately. Especially with everything I hear about banks. I'm kinda confused. Like, what's the real difference between conventional banking and Islamic banking?
I see. That's a big question, but don't worry, I can explain. You're asking about the principles, right?
Exactly. I keep hearing about them, especially in Malaysia, where both types of banks operate. But I don't really get what sets them apart. Can you break it down for me?
Sure. So, conventional banks and Islamic banks both deal with money, but their principles are totally different. Let me start with conventional banking.
Okay, I'm listening.
Conventional banks operate on the principle of interest. They provide loans to customers and charge interest, which is their main source of income.
So, they basically lend money and profit from the interest people pay?
Exactly. Let's say you borrow 10,000 from the bank. Over time, you'll pay back the principal amount plus interest, say, 5%. That extra 5% is how the bank makes a profit. It's all about interest-based transactions.
Conventional banks also invest in various businesses to generate even more income. The focus is on maximizing returns, no matter what. The main goal is profit, whether or not the businesses align with ethical or religious guidelines.
So, they make money from the interest even if the borrower has trouble paying it back?
Exactly. And often, this results in the bank's own interests becoming the most important, which means they focus less on fairness and more on maximizing their own gains. They don't always ensure the growth is shared equitably. Also, borrowing from the money market is relatively easy for these banks because they're not restricted by any ethical considerations. And since the income from the loan is fixed, it doesn't require much expertise in evaluating the potential of the businesses they invest in. Also, borrowing from the money market is relatively easy for these banks because they're not restricted by any ethical considerations. And since the income from the loan is fixed, it doesn't require much expertise in evaluating the potential of the businesses they invest in.
So, they don't care much about the projects they're funding, as long as they get their interest back?
Exactly. It's more about the guaranteed return. Conventional banks place a lot of emphasis on the creditworthiness of the clients, but less on the social impact or ethical considerations of the projects themselves. The relationship between a conventional bank and its clients is very transactional. The bank sees itself as the creditor, and the customer is the debtor. The client owes money, and the bank is there to collect. So, it's more of a one-sided relationship? Right. And the bank is responsible for guaranteeing all its deposits, which means they need to ensure they have enough liquidity to meet withdrawal demands.
It sounds like conventional banking is really built on the idea of controlling the flow of money and making a profit from it, without much consideration for ethics or fairness.
Exactly. Now, let's dive into how Islamic banking is different and why it operates based on entirely different principles. Now that we've covered conventional banking, let's talk about Islamic banking. It's really different in both philosophy and practice. Islamic banks operate based on Sharia law, which outlines ethical, moral, and religious principles. This means all transactions must align with Islamic guidelines. Unlike conventional banks, which focus on maximizing profit through interest, Islamic banks focus on risk sharing between the provider of capital, the investor, and the user of funds, the entrepreneur. This means that instead of just lending money and collecting interest, Islamic banks partner with entrepreneurs, sharing both the risk and the rewards of a venture. Although Islamic banks still aim to maximize profits, they do so with Sharia restrictions in place. This means they avoid investments in sectors like alcohol, gambling, or anything considered harmful under Islamic law. The core principle here is that profits must be earned through ethical means, and any form of exploitation or interest is strictly prohibited. So, in Islamic banking, it's not just about lending money and charging interest. It's about partnership, shared responsibility, and ethical investments. It's a system that emphasizes fairness, equity, and avoiding exploitation, where both the bank and the entrepreneur succeed or bear the losses together.
That sounds so much more fair and balanced. I can see why it's become popular in Malaysia and around the world.
Now, let's compare the two. Conventional banks are interest-based, while Islamic banks operate on profit sharing. Conventional banks focus on maximizing profits, even if it means higher risks for customers. Islamic banks, on the other hand, emphasize fairness and ethical practices.
So, one prioritizes profit, while the other prioritizes shared responsibility and ethics?
Exactly. It all comes down to what aligns with your values and needs.
Thanks for explaining this so clearly. It's fascinating how two systems can approach banking so differently.
Glad I could help. Whether it's conventional or Islamic banking, it's all about understanding what works best for you.
Of the analysis of how Islamic banking reflect ethical and professional conduct in financial dealings, as in question 2. Islamic banking is when customers and bankers discussing profit-sharing contracts like mudarabah and musyarakah with trust and transparency emphasized. It promotes risk-sharing between provider of capital and the user of funds. It aims to maximize the profit but subject to Sharia principle, so no provision to charge extra money from the defaulters.
Islamic banking prohibits riba, interest, as it views money solely as a medium of exchange rather than a commodity of profit. It promotes risk sharing, and the contracts must be transparent, with the clear terms to ensure justice. The investments made also must comply with Sharia laws, avoiding sectors that are harmful towards society such as gambling. This is to make sure the financial activities contribute positively to social welfare.
But what about conventional banking? Is it ethical? Conventional banks are often operate in an interest-based system. While it can lead to wealth accumulation for lenders, it's also a financial strain for borrowers. The bank will transfer the risk to the borrower, with securing its return enough through interest payment regardless the borrower's status. Since its primary objective is to maximize profits rather than societal impacts, their ethical considerations may vary.
Conventional banking is when loan contracts with interest rate or riba and financial risk calculation are taken into account. The investor is assured of predetermined rate of interest that aim at maximizing profit without restriction, so banks can charge additional money in case of default.
Islamic banking promotes higher ethical standards and professionalism. The requirement for transparency upholds honesty and integrity, aligns financial activities with societal welfare. Conventional banking focuses on profit maximization that may sometimes lead to ethical dilemmas.
Therefore, these two different principles can reflect their ethical and professional conduct in financial dealings, such as Islamic banking emphasizes trust, fairness, and risk-sharing, ensuring ethical practices, meanwhile conventional banking often prioritizes shareholder profit, which may lack alignment with ethical considerations. Examples in Malaysia of banking practices demonstrating these two differences is when a customer want to apply for a housing loan, but the bank have the interest rate of 3.1. Meanwhile, in Islamic banking, when the customer want to get an account, they can have the deposit on deposit account based on Al-Wadi'ah principle.
Other examples in Malaysia.
Bank Islam offers Mudarabah savings account, where profits and losses are shared between bank and depositor based on pre-agreed ratio.
Maybank, which is a conventional banking, provides fixed deposit account with interest rates, rewarding depositors with interest over time. Other than that, conventional banks invest in a wide range of industries, as long as it is beneficial to them, including those prohibited under Sharia law. Meanwhile, Islamic Bank ensures its investment portfolios exclude companies that involve in non-halal activities, obeying the ethical guidelines.
Islamic banks offer various banking products like Ijara and Takaful, while conventional banks provide traditional savings account and interest-based loans. However, both banking methods symbolizes coexistence in Malaysia's dual banking system. It is to cater the diverse need, contributing to Malaysia's vibrant financial sector.